Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, it is the 1st of December today, and I hope everyone is doing good. I know I am, and it's getting cold here in Dallas, actually. So I had to put on the heater this morning before I got up. But well, get into the slides. It looks as if Apple finally has come out of hibernation, and it looks like it's changed trend and it's in an uptrend. I did buy some this morning, and just have a little video that I can show you on kind of how I figured out why to do that and when to do that. So that might be kind of fun as well. And so just let's get into the slides. Well, the market is in a confirmed uptrend. The NASDAQ is at 12,389.98 when this was taken, up about 1.57%. Seems to be powering higher, which is a great thing. S&P, Dow Jones, and the New York Stock Exchange all up today. So that is indeed looking very good. S&P basically has moved above a very key level, and that's, of course, the 360 level. It's at 367.55 right now, so that's looking good. And that, so we have retaken the uptrend, which is a good thing, as you can see from the low here that was made basically back in March 23rd, and where it hit, believe it or not, it hit a 218 here, and it's come all the way up to 367. So that's very good. The key level, of course, being right about at that 360 level. So we're above that. We're continuing that trend upward. So that is a very good thing. That's looking good. We're also on the QQQ, and of course, this is where many of the big tech stocks live. This is where Apple is, of course. This is also where Microsoft is, and Tesla will be in the S&P here very shortly. It's already in the QQQ. These are the 100 largest stocks that are basically in the Qs. So that is also a very interesting thing. So without further ado, just kind of want to tell you why I bought Apple this morning. Hello, this is Jim Malone coming to you live from Dallas Trading Floor. And this is a short video that I'm making on why I purchased Apple today. You see, Apple, like a lot of other stocks, will continue in a trend. On August 31st, Apple split 4-for-1. And after the split, the stock basically moved downward, and it broke its trend from an upward trend to a downward trend. And this has basically been how Apple has been trading since August 31st. Now, on November 22nd, that all changed. There was a change in character, and this is one of the best places to buy a stock, when it is changing in character. What happened was Apple started to move upward, and there was a heavy volume spike. Then it moved beyond this trend line. When it moved above the $120 mark, that was my signal to get into the stock. Today, I purchased 100 shares of Apple at a price of $122.42, and a new upward trend has been made. Now, hopefully, this upward trend will continue up to the 140 range for the stock. This is always a good way to buy. Form a trend, and then when there's a break in the trend on heavy volume, remember that's heavy volume, then it's time to possibly come into the stock as it changes direction upward. I hope you enjoyed this small video. Well, basically, that is why I bought Apple today. It is going to be moving higher, and just want to give you a rundown on my current holdings. I'm in NET, Cloudflare. I'm in Tupperware. I'm still in Tupperware. It's out of the small portfolio. Blink Charging is in there. It's down a little bit today. Hopefully, I'm not going to have to sell this one. I'm in Progeny, PGNY. It's up just a tad, 18 cents. AMD is basically even, nothing, not up, not down. But I bought that off a good pattern, so hopefully that'll move higher in the future. PayPal is up convincingly, $4.36 today, or about 2%. I do think it's starting a run there. Palantir, well, it's pulled back a little bit. Hopefully it's going to regain some strength and then move higher. This is a much more volatile stock, but I do have a fairly good size position in this. Also, Apple, that is, as we explained, it's up $4 today at 123. So it started making its move right about 120. So kind of an interesting way to go there, and just kind of a quick look at how things are trading. So without further ado, thank you for holding on here, and we'll get right into the questions. Neo is taking it in the chin today. Well, I agree with you. A lot of the Chinese stocks have really sold off hard, and this is the reason it's so important to be in when you're in a stock and you see some of this coming. I'm going to move to the weekly chart here and then to the daily. When this is starting to happen, as you can see, we're starting to see a movement back. You always want to set your stop losses, and when a stock is ascending like this is, like very, 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 very tight ascent, you want to basically, as it moves up, you want to keep setting your stop losses up until finally it's going to fail, but you're going to be sold out. A good rule of thumb is at the end of the day, a stock that's moving up like this, to keep setting your stop loss up. So where you have no more than about 2.5% between the end of the day selling price and your stop loss. And that way you can many times, basically, preserve some of that upward momentum. It's so hard to get it. Let's take a look at the checklist. 7 out of 9, so that's pretty good. Our funds are looking, we're increasing our funds, but this is the kind of thing. I think Tesla has moved. Is kind of moving sideways a little bit. There's a little bit of resistance for Tesla at about the 601, 602 level, and it seems like some of these stocks are also in sympathy with that. As you can see, there's a tremendous pullback to the 21-day line, and that's basically right here. So we've pulled below the 21-day line. As you can see, this RS rating, 99, is still very good, but the trend line has moved, unfortunately, downward. So what would I do here? Well, if I have a stop loss on this, I'm going to be, setting that stop loss tight. I'm going to wait because this is just a change in trend. Just as Apple, in the video that I showed you before, has moved to an upward trend, this, unfortunately, has moved to a downward trend. So hopefully it can recover. Let's look at the weekly chart. We still haven't made a trend here, but this is significant. If we have another day pullback to basically this level, which is the 40-day moving average, then I think you might want to head for the hills because there may be an actual trend change, as you can see. So it isn't a trend change yet, but another day of this, and I'm afraid it probably will be a trend change. So be very careful with this. Set your stop losses about 2.5%, 2.5% below the close of the day before. Take a look at Blink. BLNK. Now I'm in Blink, and I have sold part of my position. I got stopped out at 33. I got stopped out of my position. It's off significantly today, $5.85. So it is pulling back right to the 21-day line. Now I hedge this position a little bit differently than I hedge most of them, and that is I have a call option, a $40 call option that expires on January 15th that I was paid $6 for. So that's hedging my position a little bit. But if it goes a little bit more below this, I may consider, getting out altogether because it looks as if it may have changed trend here. We won't know until tomorrow. But I mean, it could easily fall down to this 14 level, and then if it fell to 14, then it probably is going to go heavy buying volume, and then we have heavy selling volume. So we're really trying to find out where the price is here. I wouldn't recommend going into this position right away. If you have it and you're down more than 7%, then it's probably a good time to sell. But always with these stocks that move very fast like this, you want to be constantly setting your stop loss up so that if it does reverse on you, you get out okay. And that's an important thing. All right, so hey Jim, what do you think about WDC? Let's look at WDC real quick. See if there's anything in there that we can see. WDC. Let's see. Western Digital. You know what? It still is. It looks like it may be starting a trend change, but I'm a little bit concerned, and I'll tell you why. Because there's only has a relative strength of 31. It is true. It has started to move up. So that is a good thing. But we really can't buy it until we get to this buy point here, and the buy point, of course, on this one is right about. Is a first stage consolidation at 65.31. So we're very much lower than that at 47.25. So really not, unfortunately, a good place to enter here. And the checklist is just not good enough. It's only 5 out of 9. So you know what? I don't think I would be going into this one. But if you're in it, make sure that you don't take more than a 7% loss, because this could very easily turn downward. It is true it has moved above the 200-day moving average. That's very key, but you never really want to buy too close to this line here. It's just too dangerous. It's just too dangerous because we want stocks that are in an upward trend, and the 200-day line tells us that we are still in a downward trend. That is the trend. So until we get above this point here, going forward, so we're going to have to be very much higher. We're going to have to be almost at 120 before we can buy Western Digital again. So I just think Western Digital is sort of a waste of your time. I don't think it's going to be the kind of thing you want, unfortunately. Let me see. I've got a question here from TikTok, just the last one. Hey, Jim, your thoughts about NEO, Li Auto, Xpeng, and JMIA? What happened to them? They keep going down. And I think they're going to continue to go down because this is the problem with buying. And it's a very unfair world out there. But, I did have a small position in NEO. I sold it. There's a lot of problems, unfortunately, with the accounting standards in China, and so a lot of this is due to that. It's just tough. They're in sympathy now. What had happened is that the Chinese government has come in and has indicated that they are not going to subsidize as much of the construction of the new facilities for building these cars as they did before. So there's been a big sell-off in all the Chinese stocks. You might want to consider a stock that kind of is out of left field, and it's actually the largest auto producer in China. And that is interesting because it's not even a Chinese company. It's an American company, and you've probably heard of it before. It's General Motors. It's off a little bit today. It's off about 50 cents, but I think the long-term look for this one is probably pretty decent. We finally have a very nice, ascending pattern. You definitely want to see that. We're right at the 10-day line. This isn't a bad place to buy it. It's pulled down, and then it's just bouncing off this 10-day line. So we're at a place that this actually can be bought. It's actually turned positive now at 44.56. Let's look at the funds in this one. The checklist is definitely good enough. 7 out of 9. I'm liking that. And also, you have increasing fund ownership. Here's why I would go with a company like General Motors, or Tesla for that matter, as opposed to NEO or Li or the other ones. It's because here you can buy a stock that's about $44 that is solid, and I think it's going to give you a better I think it's going to give you a better play. Now, here's the thing about General Motors. I have not yet bought General Motors, but it is on the watch list, and hopefully we're going to be able to pull the trigger on it pretty soon. It doesn't have really the correct base yet to buy it, but the thing about General Motors, once they get going, and it takes a long time for them to get going, once they get going, they can produce the cars. They have the plants, both here in the United States, in Europe, and in China, which is very exciting. So that's one of the things why you might want to consider, if you've been in NIO and something like that, maybe moving over to General Motors or another Chinese play. Also want to take a quick look at, while we're on the auto biz, Tesla, TSLA, and of course, everybody knows I'm a Tesla bull, and it's pulled back up again today. It's seesawing. Now, here's the thing. I've sold out at 570 on Tesla, but we are in a situation where it is sort of between two areas. It's between this area here at 600. Okay, there's a little bit of resistance there. And then on the low side, about 530. There you go. So we're kind of in between there. Now, I'm going to probably buy it again, but I'm going to wait until it breaks above the 600 level. And the reason for that is because that will give me some security that it won't fall back. So we're kind of pushing up the hill. We're trying to get beyond that $600 point, and then hopefully if we get beyond there, it's going to go higher. I do think Tesla is going to go higher, but there is a little bit of a hiccup. There's a little bit of it's not really a pivot, but there is a little bit of a hiccup right about 600, as you can see on this chart. So that's where I'm holding. Another thing about Tesla that you have to notice, there was a lot of volume here, but it was selling volume, and that was just a few days ago. That's when we got pushed out at 570. But I'm glad I did, because it's making a little bit of a move. It seems like it's topping out here, so we have to see it change direction and pull through that 600 before it is ready to go again. And I definitely think it will be, but you just got to be careful about buying it. All right, so let's see. Okay, thoughts on Costco after the $10 dividend? Well, here's the thing about dividends. Most of the stocks that I trade are really not dividend stocks, and there's a reason for that, because the dividends sort of are built into the price of the stock. That's actually what Warren Buffett said many years ago. He doesn't pay a dividend, and Berkshire Hathaway has never paid a dividend, and part of the reason for that. Now, here's the thing that's going to shock you. When they pay a dividend, it's basically saying to the big stockholders, stick around. We know we're underperforming, but if we give you a bribe, maybe you'll stick around. And that's definitely been the case with Costco. They've had a pretty good chart. I mean, here's the weekly chart, but as you can see, the earnings are basically in 5 days. And my guess is, and this is just a guess here, because it always is, my guess is that we're going to start to see some weakness. And I do think I would sell this right before earnings, because I think that, who knows what's going to happen after earnings, but it looks as to me, with this chart, with this relative strength of 76 here, where it was higher before, you see it was much higher before, and now it's pulled back. With this relative strength and this downward motion, I think that after it comes through earnings, it's probably going to sell off. That is my opinion. So would I buy it now? Well, I probably wouldn't, because there's only 9 days left until earnings. So I'd be very careful with Costco right now. It's a great company, but it could pull back on you very, very harshly. Just because they're paying a $10 dividend, that's not enough. I don't want to lose $50 to make 10. So, that's the thing you want to be extremely careful with coming into earnings. Do you think Apple will go to 124? Wow, that's a good question. This is a question from TikTok. Let's look at the Apple chart, because I did buy Apple this morning, and I think it's going to go higher than 124. And I say, why do you say that, Jim? Why? Well, the reason I say that is because Apple finally broke a trend. For a long time, it was just kind of hanging out, and there's the trend line, you see. it was just hanging out. This is when it made. This is when it had the 2-for-1 split was right here. This is August 31st. Here, it hit an all-time high 137.68, and that's a split adjusted price. Since then, it's been trending down, except for today. It seems to have made a motion above this trend line. This is the trend line here. So I think it could easily make 124, but actually, based on this chart, I believe, it could possibly pull all the way up to this line here, 138, which is the consolidation pivot point. And I do think that is the key, is this 137 price here on Apple. So I think now is the time, as you can see, there's some good volume there. Now is the time possibly to be moving into Apple. And the higher it goes, the more you want to get into it. But it definitely has a very good buy point. The buy point, I was a little bit late on this one. I came in at about 122. I probably should have come in at 120, but I was glad to get in because I do think it's moving higher. Now, Apple won't run as fast and hard as a Tesla or other stock like that. It's gonna be relatively. I think it's going to be relatively orderly, but I do believe it has changed trend and is moving upwards. So, it might be a good time to possibly look into that. Look into that stock. Okay, so Christian, thank you for your comments. Always great. PRTS. This is a great one, by the way. PRTS is, here's the thing. I don't think next year is going to be a great year economically for a lot of people. I think it's going to be very hard for them. But I do think that the auto parts business is going to do great because this is carparts.com, and this is a very good stock, by the way. This is one of the very best companies. This was on the list that I put on yesterday of the stocks that are basically up over 500% in a year. And this one is tremendous. I really like this area because everybody has a car and a lot of people have to fix them. And this is a great way to get parts online. Look at this strength. Tremendous. 98 on this. This is a very, very good suggestion, Christian. I appreciate that very, very much because I think this is a great way to go. Look at the weekly chart. We have a very nice trend here on the weekly chart, and we do have a formation, a cup formation. So that's really good too. So we're almost really at a buy point. Yes, it's pulled a little bit above the proper buy point. The proper buy point on this one, the pivot, is basically a first stage at 1490. So let me put that out there on the chat. I think this is a really good one. 1490 is equal to the pivot for PRTS, and this is the first stage, by the way. A first stage pivot. Those are the best ones that you want. Those are the base patterns that you're really looking for, is the first stage one. So, Christian, this is excellent. This is probably going to go into my watch list. PRTS. This has done extremely well in the last few months. So, very good. So, let's see. Question. Thanks for holding on here. Okay. So, what's the stock? Okay. PLTR. Okay. Let's look at Palantir. Again, I do have a position in Palantir. This one's a tough one to trade. I'll be honest with you because it's so spiky. But I do think that this one could easily double in 6 months. So, PLTR is the symbol, and it's essentially a first stage IPO base. These are very hard to trade, as you can and let's bring up the chart. This is, it's a very, very spiky chart. So let's go to the weekly. That's kind of really where we have to start. And you see it's pulled back right to the 21-day line. Okay, so and it's pulled back. So not unexpected. It's off $2.07 today at $25.60. This one's a tough one to trade. Really, the last proper buy point was a first stage base on the IPO base at 1142 about 4 weeks ago. I did buy this stock. I held it into earnings. I sold it before earnings, and then I bought it back. I may have bought it a little bit too high, but I do think this one is going to continue upwards. Let's look at the daily. See, we've had this big pullback here to this level, but I think that this is sort of where it is. It is showing some of a floor here, basically at about 23.50 or about 23.75. Right about there. It's currently at 25.72, and I currently have this in my small portfolio. So, not time. Probably not time to do anything out like this. Be careful. Let this move higher. You really have to. This I think will settle here, and then I think it'll make a breakout. But right now, let it base, and before you buy some more. I did. I bought a few hundred shares, but. And then it promptly pulled back. So be careful with this one. If you do buy at this level, do set your stop loss very tight at about 2.5 to 3.5%, or about 23.50 on the price. So this is going to be a tough one to trade, but I really do believe it is going to move higher. I think it's pretty much definitely going to move higher. So let's see. Okay, well, let's go to the next question. Thanks for holding on here. We did Costco. Thoughts on Apple, AMD, and Facebook. Okay, well, let's. We covered Apple there, but let's cover another stock that's in the small portfolio, and that's, of course, this AMD. And AMD was very nice. It's up again today. I do think it's going to move higher. As well. The proper buy point for AMD on a fourth stage base was 88.72, and we did have some very nice buying. So let me kind of take a look to see. I just want to see exactly where I bought that. And of course, that's in the small portfolio. And by the way, you can always take a look at the small portfolio by going in and going to going to Dallas Trading Floor. So the website. So let me pull that small portfolio up here, and this is a Google sheet, so it updates automatically. So just kind of give you an idea of kind of where I'm currently in the issues. Let's pull that up. Okay, there we go, and pull that over there. Super. And I did do some selling. I was sold out of several positions today, and I have been shaken out again of several positions. But currently, I'm in Cloudflare, and AMD, and PayPal. This is in the small portfolio. I do have a position in Apple, but again, I just entered it today, and it's not in the small portfolio. It's in one of my other portfolios that I trade. And I was kicked out of Tupperware. It sold out at 33.50. Not too bad. Up 7% in about 16 days, and Form Factor 31% in about 29 days. So we're out of those two. By the way, this has a watch list that I update on a regular basis, and it gives buy points. I put Apple on today, as you can see. Basically, this is going to when I do put this into a small portfolio, I'm waiting to see it move back to about $19. I will put in a one full position, which in this case equals about 7 shares. So for the small portfolio. So this is kind of a good way that you can kind of follow along with me to see if that makes sense for you. Some of those that are on the watch list. By the way, it's super easy to sign up for it. You just go www.Dallas Trading Floor, and then right here it says subscribe, free trade alerts, first and last name, email, and then hit that subscribe button, and there you go. And of course, I have today's show on here, as well as all of the podcasts. That's on the little podcast tab, and there you go, on the podcast. So those are out there as well. So thanks for bearing with me. All right, so let's take the next one, and that, of course, is Facebook. Let's go over to Facebook. Facebook has been moving nicely. Finally, I think that we're starting to see towards the end of the year, we're starting to see a movement back into some of the FANG stocks, and hopefully that's a good thing. We're still below buy point though on Facebook, so you don't want to come into Facebook right now right at this moment. You want to wait a little bit because there is a consolidation. Cup with handle. 297.38 is the buy point. We're at 286.44. So really, the thing to do, I mean, you could do an early buy here, but there's several things that I think that you kind of, just for safety, because I do think it's going to get tougher to trade as we come into the new year, but it currently is only a 71 relative strength on this. I like to see at least 80. We do have a good checklist, 6 out of 9, and the funds are in it, so that's good. It's increasing funds. So where would we buy, where to buy Facebook? Well, we look at the daily chart, and really there's 2 places that we can buy Facebook. One is the 297.38. That's right here on the consolidation, and then the other place to buy it would have been on the reversal off of the 21-day line. So right now, it's just not an ideal cancel-in place to buy, the stock. But let's see if it moves above 297.38. If it is, then I'm definitely a buyer. I'm probably a buyer of this. But without it being, without it being at that level, I'm not a buyer of it. So let's see if we can pull back to. Well, it looks like I'm frozen up on the screen here. So hopefully you're hearing the voice. So let's see if there we go. All right. So hopefully that'll come back. There we go. Okay. So thoughts on NIO? Well, let's look at the chart on NIO. NIO's been pulling back, and I think all the other Chinese automobile stocks. This is why it's so important when you have a stock that moves up as fast as NIO to keep pushing that stop loss up, so that if it does, reverse on you, you're not in a bad way. Yeah, this is just pulled. This is pulled below. We've got a lot of situation here. I don't know if this is a sell-off, but it's looking like it. It's very much looking like there might be a fairly major sell-off here. We have larger than average volume here, and then we have a spike that's pulling down. So I think you want to be super careful on NIO. Now is not a time to be buying NIO. Today is a good time. If you're in NIO, you might want to set your stop losses up. You might want to, protect your gains if you've got them. So that's good. All right, take a look at Blink Charging, and again, I have a small position in Blink. It's not an overly large position. I seem to have. There we go. So you get the feed here again. I'm having a little bit of issues with the bandwidth here. So let's look at Blink. BLNK is the symbol. And of course, they just acquired another company called EasyGo, which has a number of charging stations. I think this increasingly is going to be a very, very good industry. The way the business model works for Blink Charging is that bodegas and other small retailers basically put in the Blink charging stations, which obviously work off a cell phone like a iPhone or a Android, and then it's on a revenue split basis. So it's pretty good. It's been selling off though today pretty sharply. This is the chart for Blink. We don't have, we're right up to the limit in terms of the in terms of selling. So I don't know if this is a how much of a sell-off this is going to be. I do think we're going to see some, the key level on this one is going to be right at this line here. This is the 21-day exponential. This is the green line here. If it falls below this line, this green line, then I think you want to get out of it. I've reduced my position. I had 300 shares. I sold 200 yesterday, and I may be out altogether by the end of the week if it doesn't turn, and it's got to turn at that 21-day line. So that's the key level, and the key level is right at about a 1750 price. So if it pulls below that, then I think that it might be going further down as well. How much money do you use per trade? Well, that's a really good question. Thank you very much. What I do is it doesn't actually matter how much money I use per trade. And I'll show you why. This is what they call position trading. And let me kind of give you sort of an idea of how and what I'm talking about here with position trading. Let's see if I can go back to the small portfolio. This is how the small portfolio works. Basically, think of your entire portfolio like a pizza pie, and that pizza pie has when you cut that pizza pie up, it has 8 pieces. So anytime you make a movement into a stock, you don't want to go in any more than 1/8 or a one position. Right now, currently in the small account that I'm showing, I have 3 full positions and then 5 positions in cash. So I'm waiting to find investment opportunities here. So whenever you go into a stock, let's say for instance, the value of your portfolio is, let's say it's $10,000 total value. If you take that and you divide it by 8, that's going to give you 8 full positions. So you don't want to buy any more than the amount that will be worth. In the small portfolio, we started out with much less. We actually started with about $5,000, but now we're up at about $7,200. So the way that works is, if you go over to the watch list here, on my watch list, you'll see that there is a proposed number of shares. And basically what that does is that takes the amount, the full position, and remember this is 1/8 of the total value, and then it shows you how many shares that you could buy. Currently, if I'm going to take a one position in Apple in the small portfolio, that would allow me to buy 7 shares. So long story short, if you are looking to put in, this is a mistake that many people that are starting out trading make, is that they will look at the value of the share of the stock. If the share price is cheap, they'll buy a lot of the shares, but they'll buy almost everything in their portfolio. Never commit more than 1 full position at a time. And the reason for that is, if you commit 1 full position and you set your stop loss at 7% below where you bought it, your total exposure for that position is 1% of your portfolio. And if you work the math backwards. So this is the reason why you want to do it this way. So that's how to go into a position. And I'll be covering a little bit more about position trading in some of my short videos that hopefully I'm going to start making this year. So very, very good. Get your money straight. Thanks for that question. And that's a really, really good question, because when you're starting to trade, people don't know properly how to size positions. And if you use this position strategy, you will size your positions properly. Okay, Moderna. Let's look at Moderna. That's I have to remember exactly what the Moderna, the Moderna MR. Let's see, Moderna mRNA. I think it is. That's Moderna. Yeah, there we go. Look at that. Okay, this is common. By the way, this is why when you should try not to buy totally on news, because it can be deadly. Now, let's take a look at the chart. Moderna shot up when they had that news, as you can see right there. But guess what? It shot way down too. So look at that. So it shot down. It shot up and it shot down. It's still got a 90. It's still got a 99. It's still got a 99 buy rating. But guess what? This is something you don't want to see. This is a spike of selling. It's also a downward arrow. So guess what? I believe that this stock may be coming down to about the 95.21 level. That's where the base pattern is. So it's not a good time to be buying until we get a reversal on this. What do I mean by reversal? Well, a reversal is when a stock pulls back, and then when it reverses upwards, that's where you want to buy it. You want to wait until it has changed its trend. Now, currently, it's still got a really good checklist, 7 down to 9, and of course, the fund ownership is excellent on it too. So, what would I do with Moderna right now? Nothing. I wouldn't buy it. I wouldn't buy it until there was a trend reversal, because it could be very difficult if it keeps on going the wrong way. So let's look at FedEx. FDX is the symbol on FedEx, and they had some very good numbers. They just went. I'm sorry. They're 16 days until earnings, but it's looking pretty good for them, and UPS, by the way, too. They have a nice trend. This is the first thing you look at. You go to the weekly chart. Look at the weekly chart. We have a very nice. We haven't broken trend, so that is good. So that's the first of the smell tests. We haven't broken trend, so that's very good. From the low that we had in March 23rd till now, it hasn't broken trend, and the trend is up. So that is definitely what we want to see. Let's look at the checklist. The checklist is 77%, which is excellent. 7 out of 9. 6 out of 9 is my minimum, so I really like that. Let's look at the fund ownership. Well, it's increasing. We definitely like to see that, because here's the thing. A stock moves higher based on its fund ownership. Typically, between 20% and about 65% of fund ownership, that's when the stock moves higher. Now, FedEx, of course, is not a recent company, and it's a very significant company. But look at their their sales have moved up 13%, which for a company like Federal Express is incredible. Now, there is a key metric that we want to look at. I probably wouldn't buy FedEx because I don't like I don't think their return on equity is enough. It's 14%, which for a mature company is very good, but I want to see 25%. If I'm seeing 25% here, I know that I'm in the best of the breed. So, would I buy FedEx? Probably not. Let's see if there's even a buy point on it that we can look at. I probably would not be a buyer of FedEx, because there's no chart pattern. But that said, that's my preference. I tend to be more for the more growthy stocks. We do have a very nice relative strength. 94 is excellent. Anything above 80 is really, really good. And it is basically moving to a higher high. That's very good. So if you did like the stock, I'm not particularly a fan of the delivery business, but this is not a bad place to buy it, actually. If you're looking to buy it. But here's the thing: if you do buy it at this level, this is not a proper base pattern. If you do buy it at this level, set your stop losses about 2.5%, 7% below where you bought it, because these can pull back. But I think the long-term trend for FedEx is good, and we're a little bit too close into the earnings. I don't like to buy them into the earnings, because earnings, there's usually a reversal, even if they've been making good profit. A lot of times when the earnings come out, the stock will drop. So be careful with Federal Express, but it's a good stock, and definitely for a long-term hold, definitely the kind of thing. Not my cup of tea, but a very good stock. Chinese and many EV companies are down due to the delist of Chinese companies that fail to meet auditing requirements. Well, you know what? That's a problem with all of the Chinese stock. During the Obama administration, the Congress slipped in a little thing that they pushed for. They lobbied. They paid a lot of people off for this, and that was that they didn't have to use generally accepted accounting principles. So the problem with a lot of Chinese stocks is that you can't really trust their numbers. I don't know if you were familiar last summer with a company called Luckin Coffee. It's sort of the Starbucks of China. Well, nobody audited their books, and they said they had all of these locations that didn't actually exist. So this is a problem in investing in Chinese issues. It's very tough to get a straight balance sheet. So there is a great way to invest in the Chinese market for automobiles, but I think it's through a proxy, and it's either Tesla or potentially GM, because if actually GM is the largest producer of automobiles actually in China. So that might be a way that you could go in there. But yeah, this is the problem with Chinese stocks in general. You cannot trust their numbers. And one of the things that you'll notice, many of the Chinese stocks, if you look to the fund ownership, usually the number of funds that are in these is relatively low, unless it's a company like Alibaba or Tencent or something like that that's been around a long time, just due to the fact that there just isn't a lot of high reliability of their numbers. So you got to be super careful when you're doing when you're investing in Chinese issues. It's just a tough one. What's a good call leap to do on Apple? You know what? I have to get back to you on that. That's a good thing. A leap, of course, is a long-term option play, and it may be very good. The thing about it is, I have to really get back to you on. I haven't really studied that, Doug, but I appreciate that question very, very much. Apple would be a good company to do a leap on. I'm just going to have to. To look a little bit before I before I tell anything. I want to look at the charts a little bit, and unfortunately, I don't have the access to all of the options chains right now. So let me get back to you on that. I do appreciate the question though very much, and that's sort of in my list of things that I want to do. Okay, Louis, fantastic. Thanks for this is of course work. This is WeWork. The thing about work, the symbol work. Oh, I'm sorry. Excuse me. I said WeWork. This is Slack, different company. Pardon me. Let's look at this. I haven't looked at Slack in a while. Well, that's very significant. Interesting. Well, that's a good call, by the way. I haven't been following this stock, but we have just moved beyond a key consolidation level, stage 1 consolidation at 40.07. It's at 43.91. So it's just pulled above its buy point here. Let's see. Gosh, you know what? Let's see if this thing pulls back. I don't really think I want to buy it above about 41.80. It's at 43.91 right now. You could buy it right now, but here's the thing: I wouldn't do it, and the reason I wouldn't do it is because earnings are only in 6 days. It's over 5% above the buy point. It's got a good, it's got a relative strength though that's excellent. Let's look at the checklist. The checklist is excellent, 8 out of 9. The only thing better is 9 out of 9 on that. And we have increasing fund ownership. So here's the thing. Here would be my advice for Slack or Work, WORK, the symbol on that. My suggestion on this is a watch list. This is a classic watch list. We want to wait on this one until after earnings. We don't want to buy it into earnings. It's just too dangerous based on the look of this chart. The reason why this is a potentially good buy is because it's changed trend. Just like I showed you with Apple, this was the trend prior to today, as you can see, and it was a trend, but it broke through that, and then as it broke through strong. This is the kind of reversal that you want to buy on. So in the last 1, 2, 3, 4 days, this has just been a monster. It moved beyond this, and then boom! Once it did, boom! It went a lot higher. So look at these very nice volumes. That is a trend reversal. You always want to look at the general trend, and when it breaks that trend to the upside, that's when you want to buy. So that is, it's probably a little bit too high right now to buy it. But as it broke through that, there we go. As it broke through that trend, that's where it went higher. So good. That's a very good one. I think you want to watch list that one. I don't think you want to buy it. Let's see if it pulls back within 5% of the buy point, and the buy point is 40.87. So you probably want to. Let's see how this swing settles. It may continue upward, but it looks like it's pulling back a little bit, and hopefully you'll be able to get into it. I think this is a very good stock, by the way. Okay, that's how much money per trade. Well, I kind of gave you my answer on that. Let's see. Let's take a look at TikTok. Thanks for holding on, everybody. Here, I'm going to take a joined. Okay, a lot of people are joining. That's great. Okay, Apple will go to 124. I think it's going to go beyond that, as I indicated before. Let's see if I can get an earlier question. I bought Moderna stock right before they announced the success. Okay, here's how you stay in. If you bought before the announcement, congratulations. Get your money straight. Congratulations on this. Here's what you want to do on that. You want to set your stop loss basically at 2.5% below the close, where it closes today. So let's look at this. MRDN. Let's see, Moderna. mRNA. There we go. Moderna. mRNA. Three times the charm. Okay, here's what you want to do. It looks like it's gonna close about 141 on there. Today, what you want to do is see if it's going to get some legs here. It pulled all the way up. Here's the thing. I don't think you want to give up any more than basically where you're at now, because you're sort of at the limit. So I would set the stop loss 2.5% below this 141. That would be about 133 or 134. Doing the math in my head. That's where you want to set your stop loss. I wouldn't let it go below that, because you don't want to give up your profit, because this thing could definitely pull back, basically all the way down to the buy point, very, very easily. The buy point was 95.21. So you don't want to give up that good, that good profit there. You want to be careful, that you don't give up any more profit than you have to. Okay, Avery Swissa. Let's look at LCA. That's I think LCA. I can't remember what LCA is. LCA is Land Candy. Oh, I don't know this one. Blank check company. Okay, here's the thing with blank check companies. I love to cover them, but the problem is I can't really do it until I know what they're going to buy. The way a blank check company works is that it's sort of like a blind pool that people put money into. It's already got a listing, and then people put money into it, and then they reverse merge into a company that they want to take public. And of course, this eliminates a lot of the IPO process, so they can get to market. They can get to market a lot quicker. But the problem is, I don't like to invest in blank check companies because I just don't know what they're going to invest in. So I just don't know. So I'm really basically at a loss for that. But let me show you the chart. And on Lancandia, as you can see, it's all over the place. Now let's look at the weekly chart. Yeah, this just isn't really a buyable chart. I mean, yes, there is a consolidation cup third stage with 19, but this just I really can't recommend this one, just because with a blank check company, you just don't know what they're going to buy, and so there's a lot of issues when it comes to that. So I'm sorry I can't really give you a good read on that. Let's take a look at your other choices. Probably another blank check company, but let's take a look anyways. APXT, and let's see if I've got anything there. Give you the Apex Tech. Okay, this is a blank check company too. Similar kind of deal on this. Can't really give you any information. These aren't really investable until they actually have a product or a company that they're going to buy. So can't really give you very much information on that one. All right, question on Unity. Unity, interesting company. I'm actually in a building where there was a game developer, and of course this is one of the big platforms for game development. And Unity is definitely a leader in this space. Very, very strong in terms of its leadership. Many, I don't know what the percentages of the game developers develop on this platform, but it's significant, and very nice relative strength of 97. So I'm liking that. This is really just a brand new IPO, so very hard to buy this right now. I would wait for the first pullback, because the way the IPO base works is it usually comes out of the gate, it trades up, and then once it's traded up, some of the big sellers will start selling. It will pull back, and then it will form a cup formation, and then after that, then you can possibly buy it. I just don't think it's buyable right now, even though it does have an excellent checklist. Basically 8 out of 9. And let's see if there's fund sponsorship. Wow, there's a lot of fun in this one. So this is not a bad company, but I just think there's really no place to buy this. The only place that you could have bought this one on the IPO basis was about 102. It's around 147. I think this is a little bit too hard to figure out. It's got the trend line is obviously up. It's moving up the 10-day line, but this line here, this little blue line, this is the relative strength line. It's pointing down. You don't want to typically enter a deal when this is pointing down. It just indicates that there may be some selling going on, and definitely there is. So I would be careful with this one. I would watch list this one. I would not buy this right at this time. So for you, that would be a watch list along with the other ones. So I'm going to hopefully try to put some of these onto the watch list as well, because I think they could be very good. But you just have to find a really good place to buy them, and right now, that's not the case. All right, CrowdStrike. This has been a tremendous stock. I am not in this one, and I should have been in this one because I knew about it, and it's done some great stuff. It's right now at 147, and let's kind of take a look at it. Basically, the buy point on a cup basis, second stage, 153.90. So it's right below. It's pulled back right below the buy point. So what can you do here? Well, it's still really good. It's got a relative strength of 95. There's been some selling activity here. I want to see possibly a reversal on this before I would buy it, but I'm really liking this stock. 8 out of 9, I'm liking that. The ownership is good too. So this is very good. There is an issue though, and that is earnings are in one day. Here's the thing. You want to put this on your ready list. This is ready to buy, but it's not ready to buy today. You want to buy this after earnings. So CRWD, and that's buy in basically 2 days, if possible, if it's still an upward trend. Don't buy it before earnings, because that's a very bad place to enter, but it may do very well. Here's typically what will happen with a stock like this is that it'll go into earnings and it will pull back. I mean, even if the earnings are great, and then when it reverses from that pullback, that sometimes is a very, very good entry place. So you want to put this on your watch list and possibly enter it, but don't buy it today, and don't buy it. Wait until it comes to earnings and see what happens, because that can really mess you up if you buy it into earnings and then the thing tanks. So trend change with Slack of temp going up because there's news. Oh, interesting. That's interesting. Salesforce is going to buy Slack. That makes a total sense. That's a great. Thank you, Ollie. That's a great comment. Salesforce has more money than, I don't know, King Mine is. They're so rich. Would make total sense. It's a very good. It's a very good acquisition by them. I could see that. I didn't realize that was the case. That makes total sense. That just makes total sense. And the question is, how high can you go? Well, I'm not privy to that right now, but that sounds like a very good deal. So I'm going to see if I can do a little bit of research on that. I really appreciate that comment there, Ellie. That's really good. And that's the kind of thing. I mean, it may be good for a few points, because that's what. That's what it definitely can move it. I'm not totally one that buys totally on story altogether, but it's an important component, especially when a company like Salesforce is potentially buying it. Let's look at Mark. Thank you for this. CHGG. See if we can find anything for CHGG here. So if I can find a buy point for you here. Okay, this is digital products, of course, and. You know what? This is not perfect. This isn't the world's best setup here. We do have a bit of, let's look at the weekly chart first to get the general overall trend. And that's going to show us, we are still in an uptrend, which is good. So we still have this uptrend sort of going along and from here as well. So we still have this uptrend, which is good. And it has pulled above the 40-day line, which is good. Now, the buy point on a cup basis is 89.82. Now, do you have to wait until you get all the way to the buy point to buy it? Absolutely not. Some of the best buys are made prior to it moving beyond the buy point. And this is a cup with handle, so it might make sense. I think it. Yeah, let's see if I can. Yeah, this is a cup with handle. See, there's a cup, and it doesn't. This Panorec didn't quite pick it up, but there's a cup here, and there's a pullback, and then there's a movement. So this is very, very buyable. It's up $3.39. Excellent. Thank you for this. CHGG. Let's look at the checklist. Wow, this is a great checklist. 8 out of 9. Nice funds. That's really good too. And here's the most important thing for growth stock, at least in my humble opinion. Oh, okay, this has got it all. Yeah, we have increasing sales. Look at the return on equity. It's 26. That is super great because anything above 24, you definitely want to be looking at it. It's got positive cash flow. I love that in a growth stock. And yeah, this just looks, everything about this looks really, really good. Let's look at the monthly chart to kind of see where it's come from. Yeah, it's making higher highs. So yeah, this is a really, really, really good, very, very good stock. I was not looking at this one before, and this one definitely may go on a list for me. CHGG is the symbol. So very, very interesting. Thank you very much for that, Mark. I think that's a great choice. I think you could definitely buy this. Let's see when the next earnings are. Yeah, we're just about earnings. We're just a little bit too, well, they were on the 26th. They were down a little bit, but it's still up 70. It's an earnings surprise, 70%. Wow. And they've just come through earnings. Yeah, this is good. This is buyable right now. This stock is buyable right now at this level. Just make sure if you do it, set your stop loss, set it about 7% below where you bought it, because this could pull back, but it looks as if the trend is moving up. So and this does look like a cup with a handle, second stage base. So that's a very good pattern. I think this one, you might want to buy this one. Don't, it's after earnings. They had an earnings surprise. That's a good thing. It's probably going to go higher. So very, 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 very good. Let's look at the short interest on it. Yeah, it's 6.4 days. It's up a little bit, but yeah, I mean there is some short interest on this, but other than that, provides digital products and services, print textbooks and textbooks for students via online platforms. So, with this COVID thing, they've been probably doing great. Well, I have I have talked about an hour here, so I'm going to be coming back tomorrow at 2:30. I really appreciate everybody here. Thanks for tuning in. We do have, if you do want to get on the trade alerts, very easy to do. All you have to do is go over to www. Trading Floor, and we're going to be on there with we're on there with the trade alerts. So that's a good way to that's a real good way to go and do that as well. So till tomorrow, everybody, stay safe and happy